What's up, guys? It's Rob here, and today we've got to talk about what's going on in the stock market tomorrow. Because unfortunately, there are some things that could be going on tomorrow that could be taking us down a little ways. Now, before we get into that, we're going to look at the market overall, see what's going on as of right now. Now, you can see that fortunately today we are hitting up a support level at 408 in the SPY. Fortunately, we haven't broken through that yet, and you can see we bounced off of it a couple of times over the past week, 3 times. And hopefully this will be the fourth. Hopefully we will be moving up off of the 408 on the SPY, but that might not be the case, all right? Even if we hold that today, tomorrow could be getting somewhat nasty for stocks. Now, while I'm bullish on stocks long term, unfortunately, tomorrow could be a slightly different story. We might see some bad stuff coming out for them. We might see some negative price action based on the CPI report, because the CPI numbers are coming out tomorrow at 8:30 a.m. Friday, June 10th, all right? That could be not the best situation for us in the stock market. Reason being, the last CPI report that we saw actually led to the inflation numbers dropping a little bit, right? We saw inflation numbers of 0.3% month over month, and this was mostly driven by deflation in the price of oil. You can see that oil was actually a big deflationary pressure in the month of April for the overall CPI. The numbers for oil and energy were all negative, and that actually led to the overall inflation numbers being lower than what people were thinking they originally might be, at 0.3% month over month. So when we're looking at the numbers for tomorrow, the forecast is for a 0.7% reading. Now, that's not the worst reading that we've ever gotten, and it isn't actually raising the inflation rate year over year. It would still keep the annualized inflation numbers at 8.3%, which is what they were at the last CPI reading. So all in all, not the worst thing that could happen. The reason people are expecting this is because we're not going to have the deflationary pressure of oil moving down in price. You can see that in the month of April, oil was relatively cheaper than it had been the month prior, right? In March. March was a very bad month for oil due to the war in Russia and Ukraine and all the sanctions being placed on Russia, which is a massive oil exporter. And that cooled off a little bit in the month of April, but you can see May has not been a good month. May numbers for oil have just been rising and rising, and that's what we've seen in June as well. We're actually getting close to highs for this year regarding the price of oil at $121 per barrel in the month of June. So June might not be great for inflation either, right? Oil typically is a good indicator of where the overall inflation rate is going. The higher the price of oil gets, the more expensive it becomes to transport goods and to create goods, and that just ekes into everything, right? When oil gets very expensive, it gets very tough to make anything for cheap. And unfortunately, a lot of investors are looking at the situation. When they see inflation going up, they expect the Fed to do something about it. So if we get bad inflation numbers tomorrow, that might cause the overall stock market to take a little bit of a dip, hopefully not too far. Now, we'll actually get confirmation regarding what the Fed is going to do next Wednesday, June 15th. We're going to have a bunch of things coming from the Fed, all right? The FOMC economic projections are going to come out then, the statement from the Fed, the interest rate decision from the Fed, and an FOMC press conference. So a lot is going on Wednesday as well, but we'll want to watch out for Friday to see what might happen at the Fed. That's when institutions and even some retail people are probably going to be moving their portfolios around to try to assume what's going to happen at the Fed, because the Fed is somewhat easy to predict nowadays. I mean, the higher inflation goes, the more hawkish they become, right? That's just how it goes at the Fed. Now, overall, I would not be too hopeful that the Fed's interest rates are going to save my money from inflation, because if you look at the inflation rates, they're around 8% annualized, and the interest rates right now are closer to 1%. So we're probably not going to be in the best boat if we just bet on the Fed to save us and try to keep our money in cash, because you can see inflation is running rampant and the Fed's interest rates are not quite that high, right? 1% versus 8%. It's a pretty big difference. So I wouldn't want to be sitting in cash. I'm still going to be holding stocks, even if they do take a temporary dip. It's often the case, if you look over the long term, we'll even look at the pandemic crash as an example, that even when the economy might be slowing down, when things might not be going that well for the overall economy, sometimes the stock market takes a dip. But then during the rest of the pandemic, we did end up moving up in a big way. Similar thing may happen. If we do end up seeing more economic slowdowns, the market moved down for a while. And just because the economy overall is moving down doesn't mean the stock market needs to, especially when one of the big threats to the economy is inflation. When things are becoming more and more expensive and cash is becoming a worse and worse store of value, it might make sense that people would want to put their money in other places, the stock market potentially being one of them. Now, right now, that's not been the case because there's been a whole bunch of fear in the market. You can see the overall fear and greed index is currently sitting at pretty fearful levels. But the good news regarding this is we might be nearing the bottom. If you look at what the levels have been over the past year, you can see that the past month or so, we've actually been rising, right? Fewer and fewer people have been fearful of the market, and more people are potentially starting to put their money back into the market. They're potentially starting to realize the dollar might not be the best place to be storing their wealth. And some people are obviously coming back into the market. I mean, you can see that over the past little bit, we've been moving up. And once again, people are becoming slightly less fearful. If this is a trend that we continue to see, that would only be good for the stock market. Now, tomorrow might not be the best day, but overall, I am bullish on stocks, right? I definitely don't want to be holding a bunch of cash during a high inflation period, even though that might seem like the thing to do when you see stocks falling. That's not necessarily always going to be the way things are, right? Sometimes the stock market makes moves that aren't the most macro effective. When you see the stock market falling, when inflation is high, oftentimes it's because people are very fearful, but they don't necessarily understand what the inflation actually means for the value of their dollars and what it could mean for the value of stocks. We've looked in past videos at what happens to stock markets in high inflation environments, and they do tend to skyrocket over the long run. So this short-term blip for a couple of months when the stock market's moving down overall doesn't have me that worried. Obviously, it's not financial advice. You can do whatever you want with your money. I'm just letting you guys know my opinions on the whole situation. And if you guys appreciate that, feel free to subscribe to the channel. That would be much appreciated by me. Now, other than that, guys, if you want to help out, feel free to hit the like button down below. That would also help tremendously. And other than that, I hope you guys have a great rest of your day. Watch out for a video regarding the CPI report tomorrow. Whatever the results are, I'll certainly be covering it. So other than that, guys, hope you have a great rest of your day. I'll see you in the next one. Bye.